Well, we've seen the best returns for the quarter and the half year, perhaps since you can remember, but it's defense stocks that have been fueling the rally, not tech. And today is the first day of July. My name is Jessica Amir. Welcome to the Daily. We cover what you need to know and consider as we progress ahead. So we've seen US stocks overnight hit brand new record all-time highs, and let's bring that up. So we've seen the Nasdaq 100 surge to unprecedented highs, and this has basically been fueled by investors actually buying into tech stocks, believing that they'll rip higher in the second half. Now, why is this? Well, it's for a couple of reasons. We're seeing hopes increase of trade deals being concreted, perhaps this week, while hopes of potential US rate cuts are rising too. And all this is supportive, of course, of stocks, which is why we've seen stocks put on a stellar performance. In fact, we've seen US stocks, the NASDAQ 100, which is on the screen for those tuning in on podcast. We've seen the NASDAQ 100 put on its best returns since December 2023. The same can be said for the S&P 500, of course, which tracks the biggest 500 stocks in the US. But if we just think about what's on the screen, the NASDAQ 100, that's put on a stellar performance, rising 18% in just 3 months. The Aussie share market has also put on a stellar show in the first or in the last quarter that we just closed off yesterday with a gain of 9%. That's the best performance that we've seen for the Aussie share market since 2020. What about the other assets? Well, gold. Gold has made a phenomenal run. It's gained 25% over the past 6 months. That's its best 6-month return since the GFC. And what about the US dollar? Well, the US dollar has suffered its biggest decline, its biggest loss since 1973. And of course, a lower US dollar is great for commodities, and it's great for you if you are thinking of buying into commodity stocks here. So the question is, will these gains that we've just unpacked, will they extend for the next 6 months and into the new year? Well, that is something that we'll be covering in our weekly analysis. You'll have to stay tuned for that later. But first, let's just reflect on some of the best performers that we've seen over the last 6 months, or perhaps half of our financial year. So let's reflect on where the most hot source has been and what you should be watching. So in the US, we've been speaking a lot about Palantir. It's been wildly volatile, but Palantir has become the best performer in the NASDAQ 100 over the past 6 months. It's now up 80%. Outstanding. So this is a defense and AI darling. It's in 2 sectors that are gaining exceptional momentum, and they're also gaining a lot of fiscal spending as well. And consider this, 60% of Palantir's forward contracts are with the US government, and that's indeed what Palantir has said. So Palantir, the best performing stock in the NASDAQ 100 in the last 6 months. Will it continue? Will these gains extend over the long term? Probably, because they're not losing any contracts, they're gaining them. Doesn't mean it'll go up in a straight line. Perhaps I would consider maybe buying into pullbacks if you see a pullback, being patient and riding the volatility out if that's something that you want to endure. Let's flick over to the Aussie share market. The best performer down under over the past 6 months is a stock that you may have heard about many moons ago, and we've been speaking about it of late, and that's Austal. This is Australia's biggest defence shipbuilder, and they have become the best performer in the Aussie share market this year. They're up 102%. So well done to you if you bought into its extreme lows, because they've put on a phenomenal performance. But of course, they are Australia's biggest shipbuilder, and they're in question again, not in question, but perhaps they are, because the AUKUS deal may be scrapped. Of course, that is speculation that has come out of the White House. We don't know yet, but potentially could they lose some contracts? Don't know. But I would say that that would be highly unlikely. That's just my thinking, given that their contracts are so substantial it'd be hard to back out of that one. Nevertheless, it is something for you to consider. So keep an eye on this stock. As we said, it's the best performer. Consider why it's also one of the best performers. It's because it's obviously in the world's biggest defense ETFs alongside Drone Shield. So these two Aussie stocks, the one on the screen, Austal and Drone Shield, are in the world's biggest defense ETFs. That means they're being bought every quarter alongside some of the world's biggest defense companies that we talk a lot about, such as Raytheon, which now goes by RTX, as well as Lockheed Martin. So that's something for you to consider. What about today? So we've spoken a lot about what we've seen, where the most momentum is. Let's just think about today. Well, the Aussie share market has opened higher on this terrific Tuesday. Two things are in focus today, metals and banks. Why metals in focus? Well, we've seen metal prices push up. So gold, nickel, silver, all their prices are higher. And this is why we've seen stocks such as West African Resources, Regis Resources, they're up to the tune of about 4% each. That's on the back of gold rallying because the US dollar has once again continued to push lower. Other stocks such as Deep Yellow and South 32, Deep Yellow obviously a uranium stock, South 32 the spin-off of BHP. They're making a lot of money from aluminium. Those prices such as uranium and respectively aluminium, they are higher, which is why those stocks are also higher. Secondly, I mentioned the B word, banks, why you should be focusing on banks. So fresh data has come out this morning, basically saying that Aussie house prices have once again risen. No surprise there of why they've risen, but it's on the back of obviously the RBA's 2 rate cuts. And so I want you to think about CBA. So CBA, obviously Australia's biggest bank, but its shares are trading down for the 4th trading day. Just looking at the screen, CBA is lower, but do consider that there is some fat to come off, perhaps some cream to come out of CBA, remembering that it's gained 20% over the past 6 months. So it could be due for a short-term pullback. So if you have CBA shares, you may potentially want to lock in some profits, may potentially sell some CBA shares, expecting a potential pullback before a run up again. Or second of all, you could just hold on to CBA and then expect a recovery. Why would you expect a recovery after a probable pullback? Well, obviously, our CBA shares can't go up in a straight line. But the reason that you would be expecting a push up higher is because, as we said, property house prices have now, we've got data in this morning saying house prices are up for the 5th straight month, thanks to the RBA's second rate cuts this year. That basically means, obviously, banks will be earning more money. So you should keep an eye on not just CBA, but also Westpac, the second biggest bank in Australia, as well as the 3rd biggest bank, NAB, as well as ANZ, the underdog of the Big 4 bank. Speaking about ANZ, ANZ is the best performer out of the Big 4 banks. Combine all these banks together, the Big 4 banks, they control 70% of the mortgage market. So if you aren't trading banks, I would encourage you to add them to your watch list and consider trading them when you have a pullback. Look at buying into the weakness and then selling potentially when they rip higher, because we've seen that the big 3 banks, not including ANZ, they've always recovered and hit new record all-time highs after a pullback. The reason for that is because, of course, they control the $2 trillion mortgage market in Australia. Last but not least, keep an eye on the MVB ETF. If you don't want to look at the Big 4 banks that we've just spoken about, keep an eye on the Australian Banking ETF because that will give you broad exposure to a diversified portfolio of some of the banks as well as other financial institutions in Australia that are expected to have a cracking July. And for more detail on why they'll probably have a cracking July, tune into our weekly, which we'll publish in due course. Have a great day. Happy trading.